right, then let's begin with our top story today. Well, fintech company Razorpay has unveiled a suite of products as its recently concluded flagship event, FTX in Bangalore. In fact, the startup is also looking at IPOing in another 2 years, post completing the domiciling formalities as it looks to move its base in India. In fact, it has big expansion plans. India's fintech ecosystem players, as you'd know, are meeting finance ministry officials even as we talk to take stock of the ecosystem after RBI put curbs on Paytm's banking and other operations. So what's the fintech ecosystem's ask of policymakers? To discuss that and more, we're now joined by Shashank Kumar, MD and co-founder of Razorpay. Thank you very much, Shashank, for joining us this evening on ET Now. I want to first understand from you, let's talk about the recent slew of launches, the new suite of products that Razorpay has launched. There's lots around AI, there's a relationship manager. In fact, you have a QR device as well. Help us understand about these products and how will they help in boosting Razorpay's business?
If you look at the journey of Razorpay, right, we have always been at the forefront of building payments product for businesses. Right? We have been the first ones to launch UPI acceptance for businesses. We have been the first ones to launch credit card and credit lines on UPI autopay, and many other such things. Right? So in the same line, right? I think recently we saw this problem that in organized retail specifically, UPI QR code acceptance is not at the same level as what you would expect in in the rest of the country. So to solve for that, to solve for the problems of cash reconciliation, to solve for the problem of customer friendliness at organized retail stores, and to solve increasing UPI acceptance at the retail stores, right? We have launched a UPI first dynamic QR device, which is a POS terminal, which is from the grounds up built with UPI as a format in mind, right? And that is what we are launching for retail stores and large format chains to further drive UPI acceptance. So the cost is also at a much more affordable and much better, and that is why we are excited about driving UPI acceptance at retail stores. So that's first. Second, I think we have launched a whole new version of payment gateway, which we call PG 3.0. Before Razorpay came in, there was PG 1.0, where you had this challenge of really bad interfaces for entering OTP or interacting with payment pages. You always had this fear that you can't press back button or you can't do anything different and where the money is in the process. So there was a lot of anxiety, and then Razorpay came in, and we designed a lot of very beautiful mobile pages, extremely customer friendly, and made it very, very simple for payments to be accepted. And that is what we call PG 2.0. Third, in the same paradigm is that we are making it easy for merchants to give ways for customers to enter coupon codes or discount codes. Earlier, all of these used to be very disconnected process. So when a customer comes on a website and has an intent to purchase, we automatically select the right coupon codes for them so that they get discounts and they are further incentivized to purchase. And the whole aspect of friendliness around this, like the whole checkout process that is there, we have redesigned it from the grounds up. So we have benchmarked it to be almost 30 to 40% faster and giving a conversion uplift of 15 to 20% further than what it is today. So that, in summary, is what we call PG 3.0, which reimagines what a payment gateway will look like, for next 10 years.
Right, so you've spoken about PG 3.0, but also let's talk about your AI stack offering, because you're claiming that AI-enabled payments will actually help in reducing financial frauds that happen via UPI. Now, tell us about the scale of these frauds and to what extent will these be minimized?
Right, so, as the scale of digitization has increased, right, it's fairly common that we have seen that, for a lot of merchants that provide services online, especially let's say like, providing items that get shipped to remote places, a lot of consumers come in where they don't have the intent to purchase, but they often put in fake orders, or they put in orders, and especially from certain PIN codes, where if you go to deliver, then they would keep the items, but they wouldn't pay cash. So this typically happens on cash on delivery, and we have seen that on cash on delivery orders, almost 20 to 30%, orders get returned, either get returned or are marked as fraudulent. So what that means is that, for any e-commerce business which is looking to deliver items over cash on delivery, there's a huge cost associated. There's a lot of logistics cost, there's a lot of return cost, and if the items get stolen or get spoiled, then there's a lot of leakage that they have to take on their balance sheet. So we, had previously launched a product that would signal for an order that whether it is likely to be fraudulent or it is likely to be returned, and the merchant can action on it. And it already brings down the returns from almost 20 to 25% to something like 3 to 4%. So it already reduces the fraud by a huge amount. But today we are feel fairly confident in our product and the AI models that we have built, that we are going one step beyond and offering protection as well, where that if we have marked an order as being not fraudulent, as something that it wouldn't get returned, uh, and you go ahead and deliver it, and you still face fraud there, then we'll cover the charges. We'll cover the logistics charges, we'll cover the delivery charges that are there, and we'll provide a protection in some sense, for the product, for the signals that we are giving, right? This again incentivizes businesses to offer cash on delivery and offer deliveries at scale across the country, and feel fairly relaxed that if Razorpay has given the promise that this order is not going to be fraudulent, that they don't need to
Right.
worry about it. They don't need to lose sleep over it.
All right, Shashank, so that's a very, very timely feature considering that these kinds of frauds are quite rampant. But let me also ask you, because AI, generative AI, is going to drive inefficiencies for companies, and spends have actually increased as far as developing this technology is concerned by companies. But what about job cuts? Because some startup companies have already decided, and some have actually started the process of layoffs due to AI-driven redundancies.
Absolutely not. We are not looking at any kind of job cut, at this point of time. In fact, we think like we'll continue to hire people, this in this quarter and in the coming quarters, because of the investments that we are making in different products and the scale up that we want, and the customer service that level that we aspire to. I think we'll keep hiring more people, but I think our great growth will obviously far outpace the people that we can hire, and that is
Right.
where I think technology plays a significant role.
All right, so you have actually achieved $150 billion in TPV for 2023, which has been significantly higher than 2022. What do you think has really contributed to that figure? And what about profitability of Razorpay overall and of separate verticals like online and offline?
Yeah, I think if you look at it, right, the Indian digital ecosystem has been growing significantly year on year, right? And for us, I think what we hold close to our heart at Razorpay is that we want to be, really innovative, known as a really innovative company which build new age products for our customers, right? And if you look at it, I think the the number of launches that we have had in past 1 year, which if I can give you a number, I think we have done more than 100 plus feature launches on our online payments for last 1 year, and along with that we finished the easy tap acquisition, so which we poured it into offline payments, right? And then we are driving our international expansion. We recently launched in Malaysia, and we're planning to launch in more countries in Southeast Asia, right? So all of these combined is where our growth is really coming from, along with the tailwind that there is a significant amount of focus on digitization from government, from the regulator, from the policymakers, as well as from businesses who are really realizing the fact that technology can be a significant enabler, right? So all of these factors come together is what really helps us drive our growth. To your second question on the profitability front, and at this point, like our payment gateway business, online payments is break even, while we continue to invest, in offline payments, in marketing stacks, as well as our international expansion. And I think we expect that all of these lines of business will reach profitability sometime in 24 months, approximately, give or take few months there, right? But that's what in a way we are aiming for.
So, Shashank, you speak of reaching profitability for all your divisions, all verticals at Razorpay by FY25. But also, very interestingly, there are talks that Razorpay is planning to domicile back into India, something that a lot of other startups are also looking at. Could you share the progress on that front, and how soon is that likely to happen? And secondly, what are the tax implications that you're seeing for this?
Yeah, I think we have begun the process for it, and we have filed for approvals from the relevant authorities, including the regulators in both India as well as the legal institutions in US. And I think we'll wait for the approvals. And those approvals will take time because some of those are sequential, and the institutions also need to do their due diligence. So we expect the process to take anywhere between 6 to 12 months, or maybe slightly beyond. Some of it is not exactly in our hands, right? And I think we have accounted for whatever tax outlay that needs to happen. We still don't know what that number might look like. But I think we'll share that update as and when that comes.
Right, Shashank. So let's now speak about some industry-specific issues. The Finance Ministry is meeting with fintech companies, India's fintech companies, after RBI actually sent an order to stop Paytm Payments Bank from operating. I want to understand first, how do you really see the regulator's statement in the aftermath of regulatory concerns? And is the current scenario really reflective of a company-specific issue or a systemic issue?
I don't think there is absolutely any systematic issue, systemic issue that exists in the ecosystem, right? I think the regulator has been fairly progressive and if I can say, like, to an extent, innovative as well. And the last 10 years, the progress that we have seen on digital payments, on UPI, some of these wouldn't have been possible without regulators' proactive support and thinking and vision for the country, right? And I think all of us have benefited mostly from the regulators' policies and actions that are there. We look at compliance as a very binary thing, right? That these are the laws of the land, and we have to follow that, and we have to be in compliant shape, and do everything to ensure that as an industry we are on the right track, right? And I think the fintech ecosystem today is like fairly dynamic in nature.
And lastly, what are your top asks as far as boosting the fintech infrastructure in the country is concerned? What are you asking of policy stakeholders?
I think the fintech infrastructure has progressed really well, if I can say so, right? In last 10 years, from the VC funding that has happened, right? So there's always enough of a spotlight and business case, right, for new businesses, new innovations to come up, right? There has been fairly good, if I can say so, regulatory support and institution support to partner with fintechs and to build new products. I think some of that needs to continue. What I would say, like, more on the fintech front is that from a credit perspective and from a banking perspective, right? How do you deepen the engagements that is present with fintechs? Because I think fintechs have played a great role on the payments front, right, and have really modernized the payments infrastructure. But if you look at banking services as well as credit services, some of these continue to be in a fairly traditional format, right, and haven't evolved as much. I think my view is that banking is going to go through a step transformation where it will become fairly digital, fairly mobile, mobile-based, cloud-first, technology-first, versus people-first as it is today. And fintechs have a huge role to play on that front. So if I can say so, like, I would urge the regulator as well as the policymakers, right, to think and really enable fintechs to bring in new technologies, new disruptions on that front, which are both people-friendly, but at the same time take us a decade forward on that front and modernize the banking infra to a good extent, just like banking and credit infra to a good extent, just like what has happened on the payment front.
Thank you very much, Shashank, for joining us this evening on Startup Central on ET Now.